All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. This market open really reminds me of one of my favorite movies. And if you've ever seen Chronicles of Riddick with Vin Diesel, he did Pitch Black and Riddick, and it's kind of this cult type series. But basically, Riddick is being hunted by mercenaries, and that's kind of happens quite a bit throughout the whole series. And he's been captured by, well, he let the mercenaries capture him. He's sitting in the back of the bus and he's tied up, or back of the spaceship, and he called it a bus, but he's tied up and secured. And the guy who is leading the mercs, his name is Toombs. And he makes this comment to Toombs. He says, skittish, Toombs, real skittish. And then he makes with Riddick's crew right there. He says, don't know about this new crew of yours. They seem a bit skittish. Probably shouldn't tell them what happened to the last crew. And then all the crew looks at each other like, what, huh? Well, the whole last crew was killed. So, it was just a really, really fun interplay. And it reminds me of what the market is this morning. It's skittish. Real skittish. Probably should tell them about the last gap up, because that's what the market remembers. And when we've seen any buying come into this market of late, it's only been on gap downs. Right? In the last week and a half, it's only been on these gap downs that we've seen the buy pressure come in. The last time there was a big gap up, there was a big sell. Right? And the market remembers that. And we are seeing a very skittish market here overall. Now, we're not seeing a bearish market, per se. We're not seeing intensity of sell and the same type of sell that we saw even yesterday morning. We're seeing lower volume skittishness. Just not as many orders coming in, not as much price action happening. Right, that is going on, and it's one of those where everyone wants to know, well, what's it mean? What's the significance? What does the price action have to do with anything? Well, this is a typical type of price action, after some heavy sell. And, we see it quite often. And this is one where, you can even see right here. Big gap, gap up after kind of basing and sells off. Okay, next day, nice and up. There's, here we have a gap up after some basing, and okay, continues on up. To look and go, well, this gap, it means it's going to do X, Y, and Z going forward because of the gap, is pretty ridiculous. It just doesn't, it doesn't jive. If we go and look at past charts, it's not one where you can say, well, in this type of environment, this type of gap after yesterday's action means boom. Now, I have talked about something dramatic happening in the market. And if something dramatic happens in the market, generally we have a gap up afterwards. Yesterday wasn't a dramatic event. In the context of what the market has been, yesterday was not a dramatic event. Yesterday was kind of a normalized event. The market traded within its normal 60-point range that it has been finding over the last several weeks. Okay, there wasn't abnormal volume. Yeah, the volume was a little bit higher, but we weren't talking about monster volume. Yesterday was not, that type of event that I talked about yesterday, that I think is the risk of that happening in the market is elevated. And by elevated, I'm talking from going from, a 0.5% to 7, 8, 9, 10% chance of something really dramatic happening. I'm not saying that the odds favor it. They're just higher than what they have been. And so, this morning we see this open. We see this very skittish open with a lot of things. Now, some of that's driven by Apple, right? If we come and we look at Apple on the open, right here, it opens higher and then immediately gets sold. Well, what happened? Well, on the open, it was released analyst comment on Apple that that some of their, well, let me get the exactness here. Here we go. That Taiwanese suppliers, their November sales are worse than seasonal. So some negative there, putting a little bit of skittishness. But where we can see the skittishness is just with the VIX. mean, this is a VIX that, is really kind of unchanged on the day here. We didn't see it open dramatically lower and really sell. We haven't seen it. We haven't seen the volatilities, implied volatilities compress. And if we go and we look at the VXX, we've pretty much seen this rally, all day since the open. So there's a heavy level of skittishness out there in the market this morning, and it's one where, we can talk about some buy signals on a few things, and there's a couple of them out there, but nothing really dramatic, nothing really what I would consider game-changing, happening out there in the market, so far this morning. Now, that could change very quickly, right? That could change very quickly, but, market is remembering. The market is, understanding those gap buyers that have had their hands chopped off pretty severely. Are they as eager to buy the gap? No. And so what's it going to take to go higher? It's going to take real money, not momentum money, not algorithm money. It's going to take real committed fund manager money for that to happen. And to get real committed fund manager money, there needs to be some more progress in the trade war other than a U.S. president tweet. And, so I would not be surprised if today the market kind of hangs out. It's probably got a 30 to 40 point range on it today, but kind of hangs out. I think it would be pretty bullish if we saw this morning sell get bought up and come back to the morning highs. I think that would prompt some, real money in. But so far, no real sign of that. We're getting kind of what has been the typical morning sell, regardless of gap up, gap down, coming into the market here so far. I have one position for the challenge, and that's on Alibaba. And Alibaba gapped up this morning, was up about $4, up about $2 here. Look, this is one where if I'm trying to optimize the Alibaba position, which I'm not, Alibaba's about getting some exposure to the upside on an oversold market with some tech triggers from yesterday, and I'm willing to be a little more patient with it, just because it's my only exposure. I'm not willing to add more in an environment where I think that options are going to compress, in an environment where we're seeing more consolidations than trends, and in an environment where, we're dealing with a gap up like we are this morning. I am willing to buy more, buy other things if we see yesterday's levels hold and we start to see some buy pressure come in. But Alibaba, this one here, we have a nice little island reversal, kind of abandoned baby candle pattern yesterday. Those of you remember Carl, Carl always, anytime he saw an abandoned baby, he would point it out to me because he knows how much I love to trade them. Alibaba is notorious for abandoning babies. What is an abandoned baby? Abandoned baby is just some candles to the downside, then a gap down, and kind of this just nominal candle down here, and then gaps on up, and generally has 3, 4, 5 candles to the upside. Now, if you've ever traded abandoned babies, you know that it is not always gap up and go. A lot of times it's like this. It's a skittish gap up, skittish day. The next day, not a whole lot, and then it goes. And that is commonplace with these, with that type of pattern here, and something that I kind of expect or would like to see out of Baba here. I still think 157, 158 is kind of a reasonable range here for it. Now, if the market does end red today, right? If it does end red, I think that's kind of is going to be viewed as a scary environment. I'm sure those that like to comment about the market to me are going to, comment, we're going to roll, right? But it's one of those where if we look at the past data, and we look at markets around support levels that gap up and then sell off, a lot of times that's just some of the final sellers getting on out. We saw it happen back here in October. We saw it happen back here in April, where we get this gap up and then sell. Sell after everyone thinks, oh, the market reversed, it should go higher now, right? If the buyers don't come in this moment, this right here, right now, then the market no, it doesn't have to go on that time period, right? So we could still see some residual selling come out, here with it. And, I think overall, when you look at the market today, what is this morning's price action? It's skittish. It's real skittish. It's a nervous price action. And by a nervous price action, it's one where the volumes aren't as high, where money isn't being committed as aggressively, right? Which tells you what? Which tells you it's not really a big part of the story. Yesterday's more part of the story than this morning's gap up and nothing, right? In terms of what is happening and what is going on here in the market. So we can't say anything of importance about today's levels. I can't say, well, if 265.20 breaks, then blah, blah, blah. It doesn't make any sense, right? Can we say a few things about yesterday's levels with the reversal? Yes, we can. Right? We can say, look, this is another example of breaking resistance or support and then holding it by the close. This is an important support level, right? It just kind of reaffirmed its importance. The importance of the current level right here and 10 points higher or 10 points lower, there is none. There is no technical significance. There's no real importance. And I think that's what this morning's showing. I think that is what this morning is pretty much about. Now, are there some individual names, individual stocks, doing some things that, maybe have some importance, right? Well, let's take a look. I mean, if we go and take a look at something like a Micron. All right, it's holding yesterday's support level, right? I mean, that's about it. Can we say that much more about it? No, in most daily charts we can't. But the hourly charts we can. Micron, fresh gap above the 7-hour, right? Happening here around support. Stochastics moving above 20. The same action we saw on Apple yesterday, Microsoft, Adobe yesterday, a lot of these techs. Not the same action we saw on Alibaba, but it was that action in those that caused me to be a buyer of Alibaba. And Micron coming off of this oversold condition here as well. So, to see it snap on back into this 37.5 area would be very reasonable, here for Micron. You take a look at a Caterpillar, right? Here we are. That same type of action as yesterday as a lot of the techs, gapped on up. Here we come back towards that 7-hour moving average. We start to see that, the prior hour's candle gets eclipsed. We could be talking about Caterpillar trading up near its highs this morning as the day developed. For me, there's not a real temptation to go out and buy these. Why? Because we haven't seen the option value compression yet. And if I'm going to go and add more money into this market, I need to see that option value compression. The last thing I want is to be a buyer of Caterpillar, take some of the downside risk, and not have any upside reward for the next $1.50 to $2. And for the most part, for a lot of stocks and a lot of options, and the way that I trade the challenge, that is the risk. I get around that buying deep in the money, but am I going to get a big enough move to really matter? No, maybe, but I'd have to put a lot more money into play, and I don't really want to be doing that right here just yet. Perhaps the most compelling position here for me is to buy some VXX puts. Been watching them since the open. I think if VXX can start to turn around here, maybe break below about 39.20, that would be a very interesting level to pick them up. The VXX puts are elevated in terms of their value, in terms of just the pure option implied volatility on the VXX puts. It's 71. It's normally high, but that's pretty healthy high. But these 40s, they're not that bad. They're $2 here. right? They're going for $2, and this is something where we're not going to see the VIX come back down to 30, the VXX come back down to 32 in that time period, but to see it come into 35, 36, yeah, that's about what I expect, and that would be, more than a double here on my options. And so, okay, if I can get an option that has at least a double potential, I'll take it, because a lot of options, just frankly, don't have that potential. But still not enough for me to want to go after that. For me to want to play that here in the market today. So bottom line, skittish. Market's very skittish here on the open. And I think this open, what the market has told us here on the open is that this open doesn't mean a whole lot. It doesn't change a whole lot that's out there. And it is one where what happens throughout the rest of the day probably has a lot more significance than what happened with S&P futures overnight in terms of the gap. I'll continue to hold my Alibaba for some exposure here. I risked that I was slightly green on the trade, and I risked going slightly red on the trade, sure. But I do want some exposure there to the upside with, after that reversal from yesterday. So going to hold that. I'd be willing to add more to it if it's able to close above 154.5 today. That would be a little bit of a comfort level for me, and I'd be willing to add to it. But that would not be until much closer to the close of the market today. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.